the crash that happens will still end up flooring a new bottom higher than we are right now. Like there's just, it feels like the new flywheels, the new institutional flywheels are just getting going.
How do you look at the evolution of institutions coming into the space with regards to the core ethos and the reasonings as to why we're here?
Where do you think we are in the cycle, if you will? Do you even still believe in the 4-year cycle? If so, where are we? If not, you know, what is the right way to think about this?
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
NotSoFast, good to have you, man. Been a longtime follower. I think Rob and I discovered your account together in the library in university in like late 2016, early 2017. So good to have you, man.
Oh, thank you for the welcome. It's so you've been subject to a pretty long arc of kind of the tail end of spec mining and into kind of whatever's going on now. So thanks so much for the welcome. It means a lot for me to be on here. Thank you.
Absolutely. It means a lot to have you on, man. We were just kind of saying you're part of that 2016, that crew, the I Am Nomad, the 𝗵𝗶𝗴𝗵-𝗾𝗂𝗋𝗵, like, you know, Kobe's kind of achieved like kind of this otherworldly status, up only did really well. But I consider you guys all part of the same crew. Like those were the OG guys back then. And I got to say, I learned a lot from you guys. I didn't spec mine myself, but when it came to picking winners and losers and looking at the fundamentals, things back then were much more closely associated with the fundamentals. And I think a lot of those lessons still ring true today. And one of the things we wanted to talk about today was kind of what's changed. Like, what was it like back then? If you could kind of give us a portal into the 2016 world, I think you could do a better job than Andy and I could. Like, how would you describe 2016? And then, you know, we'll contrast that with the era here and now.
Yeah, sure. Well, the kind of like the tide of legitimacy was so much lower then. Like we'd come off the pump of Bitcoin to USD at the end of 2013. And it was, you know, oh, a Bitcoin's like $1,200. And then it looked like throughout 2015, Bitcoin would just be between $200 and $300 until it died forever. And Ethereum took a lot of people's Bitcoin and then just kind of had a pre-token trading on centralized exchanges. But unless you were really looped into the Ethereum ecosystem, it was just another cash grab that people weren't really working on. And to most people's accounts, it was just something else to trade. The survival of everything, Bitcoin and everything worse than it, was not guaranteed. Most people didn't know or care. The price wasn't going up at all. And so it was just a place, it was much the same, a degenerate place to play as the current kind of meme coin market. Maybe like there are some parallels with that, but you had more, I guess, believers in the fundamentals of technology, and you could experiment with stuff directly. Like you would have to download a wallet executable and try sending like shielded or anonymous payments yourself, or like try to amass a certain number of coins and run a elevated status masternode in a network, and, you know, see the fundamentals for yourself and convince yourself that they were any better than this kind of the narrative that they were proposing. So much smaller, still pretty degenerate. You had, I think, a little more pie in the sky belief, but some of those things that were pie in the sky have played out, I know, beyond my wildest dreams, like institutions buying Bitcoin and Ethereum and even like Litecoin and other stuff is crazy to me. Like, I don't believe it. And had you talked to someone back in 2016, as you guys would know, that would be unbelievable to imagine back then.
Well, that was kind of like the meme back then, right? It was like the institutions are going to come and buy your bags. It only took, 9 years for it to actually happen?
That is a long time. But like at the time, it felt like never. It felt like, am I deluding myself by like investing my time and effort and sometimes money into this stuff?
Yeah. Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield, so you can sit back and enjoy this summer. Deposit stablecoins like USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol. Dude, so what was some of your best plays back in the day? Like you found a coin through, like how did you find, so today we have PumpFun, we have Twitter, we have like people going on, block explorers and like trenching hard and trying to find, through different Telegram bots and different Telegram apps. You've got like all these ways of like sniping coins and like, bundling things and like, it's absolutely exploded into a whole nother world. But back then, like, how would you find your next potential play? What were you like looking for? And like, what were some of the best or biggest plays that you had from spec mining? And like, talk us through it, like the process.
Sure. Okay. So for specifically a spec mining play, discovery then was so much simpler and so much slower. You would go on the Bitcoin Talk forum, their kind of tertiary altcoin board. I think the number was like 159.0. They barely tolerated altcoins and altcoiners, but they wanted just a place for it all to happen. So you would have alerts set up for new coin announcements, and that would actually work. Like you would get an email about a new coin announced or something, and then you could quickly verify like the source code related to GitHub yourself and everything. So a really good play would have been right at the start of 2016. There was an announcement by a dev called 7hacks with the E's changed to 3s and the A changed to a 4. And that was for DNet, short for darknet. So it was an anon coin, proof of work, with a view to, I guess, going proof of stake later, which you could do after some distribution. So I mined the heck out of it and even like bought on some centralized exchanges. And back then, everything was based in Satoshis. Like there was no real stable coin market. So you were trying to grow your Bitcoin stack with all these plays. Anyways, I mined a bunch of DNet, and eventually it pivoted and rebranded itself into PIVX. And I'd been mining on my own computers, and then because I'd set up a wallet, some of the stuff that I'd rented other people's computers and GPUs to mine, I had just lazily and with poor OPSEC sent to that wallet. And those GPUs were on a computer or like next to a computer, I think connected to a hard drive on a computer that was in a storage unit in like this old like renovation company where I had like a plywood locker with like a 3-digit combination lock on the door. And so in 2017, when PIVX was going from like nothing to like $60 a coin, I'm thinking about this computer. I'm like, oh my God, there's $2 million on this computer. I have to go get it. So I'm like strolling into this like crappy company where everybody's stealing like everybody else's equipment. And I'm looking at this locker. I'm like, please be there, please be there, please be there. And the computer was there. So that was like one of the best plays. It was by the skin of my teeth, like rescued a giant fat bag from a hard drive, dusty machine. And like the drill was gone. The computer was there.
Wow. Dude, actually, I remember PIVX from 2017. It was like one of the Bittrex coins that was like hot for no reason.
Yeah. It was pretty decent. They had like, all the good flavors of the time, like a masternode enabled.
Masternode.
Masternode.
Oh my God, Rob,
Yeah,
there was
yeah.
that,
What a
there was that
narrative.
woman that came to our Bitcoin club who was doing that Masternode program, and PIVX was one of them.
Yeah. It was.
Dude,
it's
that's
really funny
crazy.
because you want to know how PIVX died. It got fully sybiled, and some dudes in like related to some company in Barrie, Ontario, which is like just a lakeside college town around here. They got most of them, and they were just farming the Bittrex chart. I still to this day don't know if they knew someone at Bittrex or whatever, but they got most of it. They lions shared all the rewards, and then they just like they paid for or organized the Binance listing and then just dumped it to death over time. And nobody could vote any differently. One of the funny things with like Masternode stuff is there's like the blockchain prints you a budget, just like the block reward every month. And the Masternodes get to vote on how that budget is allocated. It's like proto DAO stuff. Yep. So you would have like these people saying, oh, I'm going to do like a marketing budget for PIVX and a marketing program. And I'm going to like say it's worth like 1,000 PIVX and I hope they'll pay me. And so they would like petition the DAO or the Masternodes and get them to vote on it. And surprise, surprise, you know, the DAO would vote and their idea would not get voted for, would get voted down. But then the guys in Barrie would submit a similar proposal, but for like 100,000 PIVX, and it would pass. So like they would steal the ideas of submitters and then charge exorbitant amounts and steal all that super block for themselves and then like just dump it on the Binance market.
Wow. That's hilarious.
Barrie,
man.
Ontario. That's insane.
That's where my parents are from.
Yeah.
So random. What the fuck?
Maybe they know the
running Masternode marketing campaigns.
So random.
Yeah. Not so fast. I got one question based on kind of that arc there. Back then, like you're saying, everything was denominated in Satoshis because those were mostly the source of liquidity rather than USDC or other stablecoin pairs. Are you still denominating your strategies against Bitcoin for the motivation, the goal of increasing your Bitcoin stack? Because that was the main strategy back then, and it's sort of fell out of favor as we've gotten more stablecoin denominated pairs. What's your approach to this in terms of like your general strategy?
So I still keep like a private offline spreadsheet that I can flip to denominate in to BTC or dollars. And I think with the rise of stablecoins, it's unlocked a whole lot of doors. It's dampened a lot of volatility because something moving against Bitcoin is kind of not as good as something moving against dollars. So it really has put a cap on like low end stuff. And it is harder also for new people to sort of force their own mindset to denominate in Bitcoin because the strategy still should be that if you're not going to outperform Bitcoin with a trade or with like a long-term play that's like venture-like or something, you probably should just be buying Bitcoin, or you should just be putting half of that investment into Bitcoin and half into the venture. So I try to maintain that. And actually I've started, I have this mental model where a coin gets sufficiently lindy that you know it's never going to die. So Ethereum kicked over. I think we can say that it kicked over kind of right now with this shot at or near all-time highs. And I believe Solana is going to be next there. So I have ways to flip my portfolio into base Ethereum and base Solana too, to see what I'm kind of, what everything is profitable relative to. And I still do look at dollars, but if I make profits, it's got to go into Bitcoin or one of those, and then I kind of reweight the mix depending on how well I think each is doing relative to the other. So that's the way the strategy's changed, but it still is, and I think not enough people make it when they should, all about Bitcoin as your denominator. If you're not outperforming Bitcoin, the kind of thing that's leading the Lindy charge, then you should really be re-examining.
Introducing Extended, exclusively on Starknet, a next-gen perps trading platform live today. With 50-plus trading pairs from crypto to TradFi, you get the best experience on-chain today. Deposit in the community vault for attractive returns and engage in a fully unified experience for spot trading, lending, and perps trading. Exclusively live at extended.app on Starknet today. Yeah, I think that lesson has been learned again this last 18 months, right? With the Bitcoin bull market, Bitcoin dominance bull market. What's funny is that everyone learns that typically at the time when Bitcoin dominance is reaching its peak, which was like in the last few months, or at least for the short term. Mm-hmm. And it's just funny how everyone's like so bulled up on Bitcoin and like think alts are gonna go to zero and die forever right before they kind of have their part of the cycle. Kind of looking into something of more current times, I saw you saw my post about Stripe yesterday, and today Circle came out and announced that they have are launching ARC, which is a L1 chain for payments, stablecoins, etc. What's your take on institutions launching blockchains for payments for bringing their customer base, from Stripe, from Circle, PayPal, et cetera, and launching these payments chains? And I think the lens of this question is, you come from a position, even just saying things like, offline spreadsheet, right? Things of OPSEC, of decentralization, of kind of like this, anti-fragility mindset. How do you look at the evolution of institutions coming into the space with regards to the core ethos and the reasonings as to why we're here?
You know what? I like it because number go up, but that's sort of the water that we're swimming in. So that doesn't need to be said. Obviously, we can attack the methodology and say, well, it's not much better than a sort of internal spreadsheet reconciled across a few different departments. And the only thing that it has going for it beyond that is compatibility with existing on-chain stuff like bridges and everything. And I think the compatibility with stablecoins too is kind of the only reason that you would set up your own corporate chain. And like, who are the validators going to be? Well, it's going to be people that you handpick. It may all be internal to this one company. Could they all collude and roll back the chain a bunch or stop new blocks from being produced? Well, yeah, they could. They're not going to. They're on the same side. So it's chain-like infrastructure. It's but everybody is able to sort of collude on it, and then you can get into the weeds on how everything works under the hood. And honestly, I don't really even I couldn't tell you what the difference is from ARC versus what Arbitrum is doing, and I almost don't really want to or need to know, because the impetus is to make it work like a normal blockchain, like everybody else expects, whether or not it is like a really centralized solution, because it is honestly underpinned by the less centralized stuff like Bitcoin, which is underpinning Ethereum, which is underpinning Solana, which is underpinning Cosmos and all that stuff. The more decentralized stuff being directly tradable with the slightly less decentralized stuff all the way down the tail helps keep the whole thing afloat. And to be honest, this is what outgrowth of the entire blockchain ecosystem looks like.
Yeah.
Into compatibility with slightly less decentralized stuff by chains launching their own L1. Well, an L1 is just an in-house compatibility module for other blockchain stuff, and especially stablecoins now. And that's really all it is. So it's okay. It's not okay from a cypherpunk angle, but the cypherpunk angle stuff is handled, and the rest is compatible, and that's all that matters.
Yeah. And so with the rise of institutions coming into the space, with more favorable regulations being put forth in the US legal framework, these are things that, one, if you had talked about them being a reality back in 2016, people would think you were crazy. Now, this is reality, and typically these would be considered top signals, right? If we were looking at this, but it feels like a new paradigm. From your perspective, I'm curious, are these top signals? Where do you think we are in the cycle, if you will? Do you even still believe in the 4-year cycle? If so, where are we? If not, what is the right way to think about this?
Yeah, that's a really good question. Like I'm of the mindset that the 4-year cycle probably still matters, just because we've all been trained on it and everyone else has sort of been trained on it. The 4-year cycle started with lockstep to Bitcoin's halving cycle, but now the new number of Bitcoins that are being produced are so much smaller than previous cycles that even though the value is up, it's not up relative to the entire market capitalization of all crypto. So that matters less fundamentally, but still maybe narratively it does matter. And I have to be honest with you guys, my wildest dreams were surpassed so long ago that I can no longer imagine. Like, my imagination's too small. I have no creativity left to predict how big things can get.
Brother, we're bringing every asset on chain. Every single asset is coming on chain.
Like that stuff. I need you to give me that idea, because I don't have it. Like, I can't wrap my head around stuff. Everything that I could wrap my head around is already like one-shotted me, So, so if I had to choose what top things are going to look like, it really has to be retail driven. And the reason why I don't think we're anywhere near the top now is that retail doesn't care. Retail is not involved, not interested. Everything that's going on right now is sort of the new crop of CT, which is CT plus a lot of Web 2 salary type people and startups and ventures and VCs and all that, just kind of in this mass, watching all these other institutions on board because they're chasing yield, and fiat's doing fiat things like denominator going to zero type things. And they're all sort of agreeing on a new Schelling point that, okay, we have to be investing in stuff that is on this narrative of underpinned by Bitcoin and denominator not going to zero and not being worthless. So I think once all those treasury companies are established, and then it starts getting into normie like pension plans, and everybody's super over invested in all these treasury companies, then at some point the over leverage that's happened to borrow to fund all this repurchasing is going to come to a head, and I can't really predict how. But there'll be some crashes, and there'll be some normies who bought the top using their apps because they're trading, and their AI agent is making those trades for them. And then we'll have some kind of crash. But I believe, and I would bet, that the crash that happens will still end up flooring a new bottom higher than we are right now. Like this, just, it feels like the new flywheels, the new institutional flywheels are just getting going. And when you see something like, you shake your head and you're like, how is this massive company and all this money doing what they're doing? Like resurrecting this old coin that I mined 12 years ago, for example, to make a treasury company based on something that I know was just made by some idiot on the Bitcoin talk forums. That's a top signal to me, for example, that I can wrap my head around.
Yeah, I saw
we're not seeing anything like that yet.
There's a bonk meme treasury company started. That was pretty good. It was small, but
bonk's a big asset, and I feel like that's not as top signally as them really scraping the bottom of the barrel in the long tail to
like
get
some like 100 mil market cap thing. Yeah. Are you just sitting on like a pool of dead coins now, like that have zero liquidity or just completely fried? Like,
oh my God! Like there are hard drives and USB drives of. Yeah. I'm not exaggerating when I say probably 200 dead L1s of just chains that are never going to be alive again unless I kickstart them, because a few years ago we figured out how to like restart a proof of work chain that hasn't produced a block in a few years. We figured out how to do that. Is there a point to it? Probably not. But maybe if like somebody really, really wants to grift off an old coin narrative, that's going to be a reality. Yeah, there's hundreds of dead proof of work chain coins just lying there dormant. There are many dead tokens, but that's a more popular thing. Lots of people have that story too. Yeah, I am a graveyard. For a while, my narrative was, well, if I'm the buyer of last resort, then maybe these things can have another bite at the apple. And in nearly every case, I was wrong, and my my net worth suffered for it, and my Bitcoin stack suffered for it. It was not the right move.
So basically, you would have to like take the risk as to like, okay, where in the like, how do I want to use my hardware and allocate my basically my power. And that would be like the kind of risk that you would take outside of obviously like, you know, investing in or, you know, trying to sell at the right time or whatever it is. But it was more about like you could either be mining Bitcoin or mining other coins and kind of like the trade-off would be that, you know, the spec mining plays would pay off much bigger.
Yeah, well, the different proof of work algorithms meant that like the 𝗂256 would pretty much always be mining Bitcoin. And if you tried to make a 𝗂256 altcoin, there was a trivial amount of Bitcoin hash that you could rent and reroute it, and 51% attack the chain, and it would kind of die in the cradle anyway. But there were a lot of other ones like the Litecoin script algorithm, and then like a whole bunch of different GPU algorithms. So what you would be trying to do is use this latent hash rate that wouldn't be redirected and redeployed to kill the speculative coin that you were mining. Rent a bunch of it for cheap, mine a bunch of the early blocks before the difficulty shot up, and then you'd have a lower cost basis than everyone else. And then you would just kind of hope and pray and meme and post that a centralized exchange would list it so that you could access liquidity. Like, we are spoiled by tokens that are speculative having liquidity from minute one, from purchase one. That was not the case. Like, you had to wait weeks, and sometimes you would mine something and it would just never get listed and it would die and it was over.
There was no decentralized exchange to add liquidity yourself.
No, yeah, exactly.
Yeah.
Well, wow. NSF, man, it's been a pleasure, man. We got our wrap as we're coming on a time. Want to be respectful of your time as well. Enjoy the ETH at 4,500, and hopefully some of these shitters that are down in the dumps on the hard drive get a treasury company for you. That'd make your year.
Thank you so much, gentlemen. ETH to the moon.
Thank you, brother.
Cheers, man.
Bye.
Speak soon. Bye.